Hi guys, how you doing? This is Dan with Index Option Trading on November 23rd after the market close, and here's the chart for DX dollar as it has been trading here. As you can see here, why the stock market was up here. We begin with the chart of dollar, which is DX, is index futures actually, and what you have seen here is this is a downward trending line here and a 50-day moving average. As you can see, there was a spike here on Friday and the stock market fell apart, but today the dollar just took a nosedive here and it is just coming down here to 75.23 here. As a result, most of the indexes in the market were up and the market was very strong in the first few hours of the day. And as you can see, this dollar is very oversold here with the stochastics almost low in 35, so it may rebound here, or whatever it looks like is somehow is putting in some kind of a lateral move, which is horizontal. It isn't quite where we could say that the bottom has come in here, because it has done this thing previously several times and it has bounced back. So that remains to be seen. With that in mind, let's go on, move on to our favorite chart here, SPX. SPX today came in here, and what you have seen here on the option expiration was another day, and which was Friday. It was the market was down, and as a result we were below this rising trend line. Today we put a nice beautiful candle here, a white candle here, and we moved up to 1106 since morning. And so that is, let me just push this back here again. We moved up here nicely here. The stochastic is in the overbought regions here, and we're seeing here the red line, which is the line that has intersects with the white line, is now beginning to turn, which is indicating to us that the market, and it looks like it may turn down here. So the longs, the story of the longs is that it becomes the risk and reward becomes very marginal. If you initiate a long here and this thing turns down and comes hurtling down, which is this, it can hit this 1075 SPX very easily, break this trend line and hit that, and all the long positions will be underwater. So you'll be soon having drawdowns or losses in your account, not knowing what happened. And so in order to prevent that, we are very cautious about it at this time, looking at the SPX here. Another story, let's go to at RUT and RUT. This is the year-to-date chart on RUT, and as you know, the market was very strong in the morning, and it formed this kind of a candle here with a long body and a pullback here down towards it. Last Friday, what we saw here was a hanging man. After all these 3-4 days, there was a hanging man that showed up here. Whenever this hanging man shows up, the trend usually turns up higher. You have seen another hanging man here in November around 1102, and there was another hanging man here on 1002, and then previous to that was September 902. So they're coming in here. Whenever these hanging men come here, or there's the downward trend usually ends and the upward trend begins, and this was very well pronounced on November 2nd. We had a good uptrend here. NDS RUT managed to close 2 days above the 50-day moving average, then produced another hanging man, and today we saw another candle, but the bears were strong enough to push this thing back towards underneath the 50-day moving average. There is a constant struggle here for the bears, not letting this index close above the 600, which is the bullish sign. If we start closing above 600 and the 50-day moving averages, we're out of the clutches of the bears, and the bulls will definitely take it from there and it will go up higher. But as long as it does not do that, we are at the mercy of the bears, and they will keep on pummeling this thing, making the advances which are going up very difficult. So we have to see if the price will confirm anything above 600 tomorrow. That would be a good opportunity for the longs. And if that does happen, this whole broad market should be moving, as well as what other indexes should be in line. Let's go and take a look at technology, which is NDX. And NDX had a fairly nice day here. It gapped up. It went up higher to 1792 and is going to hit this rising trend line. And the stochastics, look at it, it is already overbought. So we're here with this downward white line, and you can see this red line now cutting it, turning below, and goes down. As you have seen here, this has happened here around 1021. This white line was coming, and when this red line crosses above 80, that's when the overbought conditions are. Most of the chart technicians and technical analysts make a note of this thing. This is common human chart behavior, textbook style. There is no magic to it. It is something simple enough to know whenever these things happen, we're getting into really overbought conditions. It will turn down and it will go down to 38 or below or somewhere here and then bounce back up here. So the NDX is also doing the same thing. Now let's move on and take a look at to SPY, which is the SPY, and hopefully we should look at the volume. The volume on SPY came in a tad lower than Friday. It's just a smaller amount of volume. So we moved up higher but on a smaller volume. And look at this. This is again turning down. It's overbought conditions here above 75. So the 50-day moving average is here. The market is kind of now the move has almost completed here, almost. And let's take a look at the ETF IWM. What has IWM done here is also did not manage to close above this 50-day moving average, and therefore this long body of the candle, and then there's doji here. So this is a different type of a candles that unless the bulls are managed to close this thing above 50-day moving average, we will see again the prices would start sliding down here. And the volume was a little bit higher than Friday, which is a good sign, and we should see how the prices will confirm tomorrow morning. So that's all for today, and I'll talk to you.